please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Ekta Batra. With me is Prashant Nair, and we greet you this Monday with the start of the week, which is quite positive for the markets. In fact, we've already touched fresh all-time highs for the Nifty this morning. So just about consolidating around those levels. 10,159 is currently where the Nifty is at. The mid-cap index also doing very, very well. In fact, above 19,000 for the mid-cap index, up around 0.9%, and Bank Nifty coolly above 25,000 as we speak. So incredible levels that we are seeing on all of these indices. If you just glance at the advanced decline ratio as well at this point in time, that too is showing a steady state, which is currently at around 2:1. So it currently stands at around 1,300 stocks advancing for around 481 stocks declining on the National Stock Exchange. Talking about specific stocks, however, there is stock-specific pressure which is at least seen in the broader markets. There are a lot of stocks which are advancing, but there are specific stocks, say, such as Apex Frozen Foods, which is the recent listing. That one is now seeing some amount of pressure, down around 5.5%. JP Associates, which is down around 4.6% at this point in time. Ipca Labs, after that strong run that we saw on Friday in the last 30 odd minutes, that stock is seeing some amount of decline, down around 4.5%. But we do have my co-anchor, which is joining in now. He's joining in and he has done some data crunching. So I'm just going to go across to him and see what he has for us today. Prashant, over to you.
Ekta, morning. The big story for the last fortnight or so essentially had been what's happening to oil prices, right? We've all been talking about it. We put some analysis out early on 2 weeks back. The oil minister and the government responded by saying that there's no plan to cut excise fuel. They also, by the way, referred to the fact that hurricanes in the US are partially responsible for the spike up in prices that we had seen. It's basically an update on that, and this is important. What essentially has happened is that a lot of the US refining capacity has restarted. So data shows that 65% of US refining capacity is back on stream. A lot of it kind of shut down because of Hurricane Harvey. Which was the hurricane before we had Hurricane Irma. As it says, capacity was shut down due to Hurricane Harvey, and IHS market data indicates, their analysis indicates that very soon we'll have pretty much the entire capacity, US refining capacity, back on stream. We can move the graphics, you'll be able to see that, almost all of it. Which means that offline capacity, which is unoperational capacity, will drop to less than 1 million barrels per day, which is about 1 million barrels per day, is about 5% of US refining capacity. All of the rest will be back on stream. What has been the impact on GRMs? And this is latest data as of last week. There you go, on your screen. So as of week ended September 15th, the Singapore refining margins have dropped to $9.3 a barrel. The high which was made on GRM, Singapore GRMs, post-Hurricane Harvey, was about $11 a barrel. From 11 has come down to about 9.3. And before the Hurricane Harvey actually struck, you had Singapore GRMs at about 8.2. So you can say that, GRMs are still higher than where they were before the hurricane, but there is a drop, a big drop which has happened. And maybe as more refining capacity comes back on stream later this week, I think GRMs will maybe go back, drift down to those $8.5 barrel levels. This has been an important trigger for markets. Okay, look at this other plate, which is essentially diesel, petrol, and jet fuel cracks, which had widened. I think, and our data also showed that it had a pretty sort of a clear and direct bearing on the prices that we had been paying at the pump. We, of course, have dynamic pricing now. We also have pricing freedom for oil marketing companies. And, the cracks had widened between crude oil and these commodities, and that had shown up in prices that we pay at the pump as well. Those are also coming off. So, petrol, diesel, jet fuel cracks are down, and, these cracks are down 10 to 22% from post-Harvey highs. It's a significant drop, and I think we will continue to see this coming through as well. Not very good news for oil marketing companies, but it's not hugely negative as well. The fact is, we had this unnatural spurt because of weather-related issues, and we are sort of settling down back to those pre-levels back again. Back to you.
Okay. All right, Prashant. Thanks very much for that. So that's basically what's happening with oil and gas globally at this point in time. But just want to point out one stock, Tata Motors, where Tata Motors as well as Tata Motors DVR, which basically has the differential voting rights, both the stocks have spiked up. You can see that Tata Motors DVR is up around 3% odd. Bank of America Merrill Lynch had come out with a report early in the morning. They've maintained their buy with the target price of 515. According to them, production ramp-up would be quicker in the coming months, and FY18 wouldn't be a true measure of their earnings capability. So maybe they're taking some amount of heart from this. They expect Chinese imports to improve, which would eventually aid pricing as well as profits for Tata Motors. Tata Motors DVR too, very active. But Sudarshan Sukhani joins in to discuss the technicals of the market then. Sudarshan, over to you. Monday morning, and it's a good start for the markets. What would your strategy be, stocks as well as index?
Yeah, good morning again. For the index, the strategy should be to be long in the Nifty and the Nifty Bank in both the indices. Now we are not only are we at lifetime new highs, we've also broken out of a narrow trading range in the Nifty Bank. That should help the Nifty also move up. So how much of gains in terms of points are possible after this big gap up, that is a question mark. But the trade is, you still want to be on the long side and find out what the market is giving you, even at current levels. So stay long. Independent, separately, the stocks also, you just given the advanced decline numbers, and that is reflecting in stock charts for the short term, for the day. Most of the stocks that are giving opportunities are on the long side. So I would suggest being on the buy side today. Start with Bata India, an outperformer. That outperformance continues. Consider buying for the day and even carrying the position. IGL is a second buying opportunity. It has been an outperformer, and that continues till date. So have the courage to go and buy it even at these elevated levels. There's more upside here. And the third is M&M Finance. This stock turned around, has been a leader in the NBFCs for the last few months, and that continues. So we are looking at mid caps which are giving us all leadership in any case.
Okay, all right, Sudarshan. Well, we have a couple of queries to address then, some Twitter queries. I'm sure there must be a lot of interest right now in the markets. The first question is from Pratik Jaiswal. He wants to know if it is the right time to invest in the stock Amara Raja.
Yeah, it's not the right time because Amara Raja has been underperforming. There must be a reason why the market is not buying. So we cannot assume that we are the only people who know the secret that this is a level to buy and the market doesn't know it. It doesn't work that way. If the market is not comfortable in a book, we don't have to go and buy it. We don't have to buy and be brave. So, and on the chart, it's on the verge of breaking down from a large support base. That's fairly bearish. So the answer is no, this is not a right time to buy Amara Raja. And the right time always is when a base is built, when prices start moving up. And in this case, it's far away now.
Okay, we have Jay Thakkar, who has 800 shares of JN Irrigation, bought at 105 rupees a share. He also has 600 shares of Rico Auto, and he paid 98 rupees a share for Rico, and he wants your advice on whether he should hold or sell them, both of them. So JN Irrigation and Rico Auto. Sudarshan.
Sure. See, JN Irrigation is a hold, although the prices are at the highs because the stock itself has moved up rapidly and the buying has probably been done at these high levels. But even then, it's on the verge of a larger breakout. So it may take time, it may take weeks or months. But JN Irrigation is giving the sense that a much bigger move is impending and is upcoming. So hold it and be patient about it. Don't get nervous by these small ups and downs. That always happens. Volatility is part of stock markets. Don't get nervous, hold it. In case of Rico Auto, I think the stock has run up rapidly and the purchase has been made at almost a new highs. There is no base building here. The breakout has already occurred, unlike JN Irrigation where a breakout is imminent. So here I would suggest for Rico Autos, go and sell it, exit the stock, buy only if there is a significant dip or a large consolidation. It's not worth holding at current levels.
Okay, Sudarshan, before we let you go, two stocks that I wanted to address in terms of chart checks. Tata Motors, which is doing very well today, as well as Divi's Labs, where the volatility seems to be continuing.
Yes, unfortunately, I am not upbeat on Tata Motors. We have to see the background and how it has fallen from very high levels to 400 plus. So These one-day moves, two-day moves are likely to continue. Some news comes and the market reacts, and today was a good day anyway for any good news to be accepted. So I am not upbeat on Tata Motors. Divi's Lab is part of the pharma sector which has not bottomed out. The bear market continues. Let's hope the volatility will end soon, but that's not happened. It's a complete avoid.
Sudarshan, thanks very much. We speak with you soon again. Let's get some futures and options trades now.